Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update from Sean Brodrick. Sean's the editor of Wealth Megatrends and also a contributing analyst to Weiss Ratings Daily. Sean, always great to have you on the show. We were just remarking off mic. It's been a month since we've chatted. It seems like every time there's been so much news flow between our conversations that it's great to get an update on how you're looking at things. One of the topics we were looking at was precious metals, the disparity between where gold and silver are at, and still where the equities are trading as far as sentiment, as far as investor engagement, and the opportunity that you're seeing in some of the gold and silver equities. From a big picture standpoint, how are you looking at things in lieu of good gold prices, good silver prices, but the equities not really responding still?
Yeah, well, the action in gold equities recently brings out the contrarian in me. I was doing a recent look over US listed gold producers, not explorers, producers. There are 10 US producers, or I should say US listed producers, that trade under their book value now. These are companies that literally pull hard money out of the ground. And so that shouldn't be happening unless you think that their costs are going to spiral upward, which I don't think they will. Most of them seem to have a good hand on their costs and like stuff like that. So the investing public hates gold miners right now. I can understand why, but I think this is leading up to a great time to buy. In fact, I have been putting money to work recently, and I'll probably keep putting money to work just because, we are at what I think is a place where we're going to bottom. Maybe not immediately, but very soon. And so I would rather be on board than miss what I see coming. So I see all kinds of bullish things happening. We won't get the rate cuts early on in the year that had been expected. Inflation's just too hot. But I expect we'll see more rate cuts later in the year, especially as we see some of the Trump economic plans unfold and like stuff like that. So there's a lot more too. I mean, we just saw the November numbers on what central banks are doing with gold. And what they're doing is they're buying it hand over fist. China, for example, which hasn't bought gold since April, is back in the market again. Poland bought a lot of gold. Of course, they have a war on their doorstep. Maybe you can understand that. All the central banks, not all of them, but most of them seem to be buying gold. I think that has partly to do with they're just seeking the safest of safe havens during what they see will be a tumultuous time as the U.S. seems like it's going to choose trade wars with some of its major trading partners. We'll have to see how that plays out, but that's probably what's going to happen, and that all sounds good for gold.
Well, and Sean, when you look at the margins right now in the industry for gold, we talk about the producers and some of them trading below their book value. It's really a strange environment. I can't remember the margins ever being this big. In fact, they are the biggest in history as far as the spread between their cost and where the price of gold is. And yet, there doesn't seem to be a lot of enthusiasm, not just from resource investors, but even from just generalists or analysts that follow the space. And it's a very profitable sector right now. There was a lot of excitement leading into Q2 and Q3 of last year about what the returns were going to be. And some companies still found a way to disappoint, which is amazing, but their cost had gone up some, so they missed expectations, but they still made a lot of money. And in Q4, we had one of the best quarters on record. Now, it has not come out yet. Those numbers are going to be reported, let's say, over the next month or two. Do you think that Q4 earnings could reinvigorate the sector when people realize these things are cash cows right now?
That's how I'm playing it because I expect them to see upside surprises all over the place. So I think that if you're careful, and you shouldn't put all your money to work, but at least some, pick up some judiciously. And I think you can do very well because when these fourth quarter numbers roll out later in January and in February, we are going to see some upside surprises all over the place. That's at least what I'm looking at right now.
How are you looking at the silver stocks in comparison to the gold stocks? They maybe don't have as epic of a spread on their margins, but they're still making money. How are you looking at the silver stocks?
Well, yeah, and again, we had disappointment from some, but I mean, some disappointment leads to investors throwing these things out the window when just it looks so good for many of these silver producers. I'm more bullish on silver than I am on gold. And let's just give you one example. Aya Gold and Silver, which works over in Morocco, had an okay year. They had some disappointment with the advancement of their new expansion project, stuff like that. And so the stock got cratered, but that doesn't change the fact that next year their silver production is going to triple, more than triple. And if anything, that's going to lower their costs. So there's no way that stock should be treated the way it is. It's just stupid money sitting there right now. I'm the kind of guy that'll pick up stupid money. It's just an easy move for me. And so with things trading at such amazing discounts, yeah, they could go lower. There's always that possibility, but I think they're going to go a lot higher. And I see that all over the silver space. There aren't a lot of silver stocks, sure, that's true, but of what I'm seeing, I like it.
Okay, so some opportunities in the gold and silver stocks, especially on the producing stocks that are really still doing quite well and should have pretty good fourth quarter numbers coming out to the market over the next couple weeks. Let's pivot over to another yellow metal, though, uranium, U308. What a wild sector, Sean. Every time we talk, this is one of those sectors where there's so much news flow. Since we've talked last, there has been even more issues between Russian supply not making it to the West because they've shipped out two different barges from St. Petersburg that don't have any uranium on them. And then you also have the news updates from Cameco where their JV is now temporarily suspended. What do you make of not just the growth of nuclear power globally, but the continued issues on the supply side from the uranium stocks?
Yeah, well, that news from the Cameco joint venture, I mean, that was kind of shocking. But on the other hand, I can see why that happened because we know that they're having a shortage of like acid over in Kazakhstan. And so I think there's a lot of supplies that might be tight over there. And if they're going to starve anything, it'll be a joint venture where they only get 60% of what comes out of it. That leaves Cameco holding the short straw. But when we got that news on Friday, which was from Cameco, what happened? Well, lots of uranium stocks went up. In fact, the ones in like the resource trader portfolio went up a lot, but even Cameco went up. Why is that? Because the uranium that it is going to produce becomes more valuable. Now, as you and I are talking, uranium stocks are down again. It's a heartbreaker of a sector to invest in. And I can understand people's reluctance to do it when every single kind of tech seems to be running away and having great fun. Why buy sad sack uranium? And I'm not saying you should put all your money in it, but I don't think it's a sector you can avoid either. There is some real potential for those stocks to do extremely well this year. And so that's just kind of how I'm playing it now.
Well, Sean, when you look across the spectrum of uranium producers, Cameco that we've talked about here is the biggest one in Canada and really the only one in Canada other than the French company Orano having some Athabasca Basin production. But other than that, that's it for Canada. We've already mentioned that a lot of the Kazakhstan material from Kazatomprom is going east. It's going to China. It's going to Russia. It's not really finding its way to the west. We had the coup in Niger, which took 5% of the uranium supply out of the French supply from Orano as well. And there's been problems in Namibia with the Hanger Langrick mine that Paladin operates, not really ramping up as fast as people expected. So the only area of growth I have seen is U.S. producers. There's a handful of them that are actually going into production or scaling up production in 2025, and most of them have plans to even increase it in 2026. Do you give a premium to U.S. production because it's really the only area of growth in the space?
Well, you actually bring up a great point, which is that the global uranium market seems to be splitting into two spheres of like influence. It now seems like China's going to buy up all the uranium that Kazakhstan can produce. We have lost some production from there being shipped to China. I expect we'll see more of that happening, which means that the West has to become more reliant on its own uranium producers. As you mentioned, the U.S. is a growth area. We have new mines coming online. We had some come online last year. We have more coming online this year. And so those small stocks, which are really priced for pennies right now, they have some real potential. Now, the thing is, we'll have to see what contracts they make and what those contracts are actually priced at. When I was in New Orleans speaking to people, it was just beyond belief that the spot market was priced lower than the term contracts they were signing. It shouldn't be that way. But what happened was, at least I was told by two people who work at different companies, someone who was speculating in the market had to sell a lot of uranium toward the end of the year. That brought the spot market down. So That should be a short-term thing. We should see that price come up. As that price comes up, we'll start to see some optimism back in this market, I believe. Just things got too low, so people got really depressed about it. So once we get some uphill momentum, I expect things will coast along quite nicely. And yeah, I think you can find bargains, and you can find bargains in those companies that are U.S. producers or that are going to bring new mines online. Either way, they look good, and that's something that I'll be doing this year.
Well, shifting our gaze up to the Athabasca Basin in Canada, that's really the hub of where a lot of the exploration and development in the sector is going on. A lot of the U.S. assets are more known entities that are just moving into production. But when you look in Canada, there's a couple big development projects. There's Fission's Patterson Lake, there's NextGen's Arrow, there's Denison's Phoenix and Wheeler River project. But
Yep.
all of those are several years away. So are you looking at those as another way to play the sector and a couple of years of development into production, or are they too far away to get your interest at this point?
No, they have my interest because of how the uranium market cycles. We're at the beginning of an upside. Well, it actually started last year, but I mean, we're still very early stages. This is going to go on for a few years. And so things like NextGen and like Denison, which has cash flow from the mill and stuff anyway. I mean, they look good to me. They look like opportunities. So I'm not shying away from them. I am shying away from pure explorers. I mean, you and I have had this discussion before. I just don't see this as the time for them in the market. There will be a time for the explorers. It's just not now. It'll be later when things get when everyone starts to get really excited and stuff. Then they'll take off like rockets. It's just right now. I think we'll get more bang for my buck from either producers or near-term producers. And by near-term, I'm even including next-gen stuff like that because they have a pathway to production. They know what they're going to do, and so that can start to be priced in.
Okay. Well, we'll keep tabs on the uranium sector and the nuclear power sector that continues to have really shocking news on a month by month basis. But let's widen the scope here, Sean, and just look at the Trump administration is about to take power in a couple of weeks. Now, there are some changes between the Biden administration and the Trump administration on how they view infrastructure, how they view commodities, how they view the resource sector, how they view regulation. Any big themes that you've got for 2025?
Deregulation is a massive one, so that's good for the big banks. They'll be doing all kinds of stuff for that. In fact, I just recommended a bank to my Supercycle investor subscribers today, which is another one trading on the cheap. It's a big bank, and opportunities like that don't come along all the time. I think there's opportunities in the large banks, in fintech generally, in education, that's online education, stuff like that. We'll see more online schools, stuff like that, mergers and acquisitions across the board, which then takes us to the energy field. I think we'll see some deals that the Biden administration said no way to. Those will be revisited and approved. We'll see opening up of more drilling opportunities, but I don't know that we'll actually see anyone act on those unless the price of oil gets a lot higher. And I'm not expecting much higher oil prices. I mean, oil's had a great run recently, so has natural gas for that matter. And it's helped out the few stocks I own in that area quite a bit. But I wouldn't be surprised if we're still range bound in there. So we'll see how it goes. So we'll see if anyone pursues those new oil drilling opportunities or not. But there are plenty of opportunities for people who want to do the Trump trade. And I just mentioned a few of them. And a lot depends on how things like the tariffs go, because people saw what happened Monday, which is the Washington Post did an interview with people who were in the Trump team, and they said all that talk about tariffs, he doesn't really mean it. He's only going to put tariffs on like critical issues, critical materials, that kind of stuff. And so that really sparked a rise in the market broadly and in gold, and the US dollar went down. And then Trump shot out a tweet saying the Washington Post is completely wrong. I plan to proceed full steam ahead on my tariffs. And that sent the dollar higher and tanked gold. So this means that we'll be trading by tweet. That's never a fun thing to do, but we'll just have to get used to it. And we'll have to see how things roll out. Now, I have heard that both China and Europe, and to some extent Canada, are actually making their own plans for countermeasures to Trump's tariffs. What he plans to do, how they plan to counter it. stuff like that. That can lead to a trade war. If we get a trade war, the economy is going to slow down. I can almost guarantee that. And so if that happens, if the economy slows down, what will the Fed do? The Fed will start cutting rates again. And if the Fed starts cutting rates, that'll undercut the US dollar, which is actually what Trump wants. He wants a weaker dollar with or without Fed cuts because that helps the US export picture improve. So he's really looking forward to that. But if the Fed does cut rates, then the US dollar is definitely going lower and gold is going higher. I'm not saying that's going to happen, but I'm saying that it's one of the things on the table. It's such a field of uncertainty right now that it's very hard for us to game. We can only do, like now, what I'm doing. I'm buying things that look obviously mispriced. And remember, if we do have an economic slowdown, that doesn't mean that the market falls apart. Not necessarily. The pandemic proved that. We had a quick fall in the market, and then as the pandemic dragged on, the market went higher and higher and higher. So I guess the outlook really is more volatility, and we'll have to play it by ear. But I would look for opportunities in the Trump trade because he has said things that he's going to do. We know there are going to be tax cuts. We know there's going to be less regulation. We know that he wants no more wind power. He has said that he wants a future without wind power. I don't know what he has against windmills, but there you go. So if that's his plan for the next 4 years, it's going to be tough for anybody in the wind power business. Now, I can also tell you Texas has more solar than just about anybody else. I'd expect solar to continue along pretty well. But, if he has a grudge against something, then you just have to deal with it. There's no point complaining about it. That's how it works. And so it'll be a wild time. It'll be a volatile ride, but we can still make plenty of money no matter how it works out. We just have to be very flexible and willing to adapt to what comes our way.
Well, that's a really great place to wrap it up for today, Sean. And it's a great message about staying flexible, being adaptable, looking at the messages. I may be trading by tweet, as you mentioned. I've never heard that before, but that is the environment we're going to be in. So it is going to be wild and there's going to be a lot of volatility, but there's always opportunity in that volatility. So we'll keep our eyes peeled on the Trump trade. I appreciate giving your thoughts on what you see in the gold and silver equities and also in the uranium space. And if people want to follow along with Sean's thoughts more keenly and get his thoughts on a daily and weekly basis, definitely click on the link below this. It takes you over to Weiss Ratings Daily, where you can see some of the subscriptions that he offers, like Wealth Megatrends, like Resource Trader, and like Super Cycle Investor. So, Sean, always great having you on the show. Appreciate you kicking us off in 2025 with this update. And as always, looking forward to our next conversation.
Always great to speak to you. By the way, I just want to mention that on the 28th and 29th, I'll be doing a Money Show virtual presentation. So if folks know the Money Show, check that out because I'll be giving a good presentation on gold miners at that